Hey, it's Ryan from the Option Income Advisor, and today's trade analysis is focused on Micron Technology. So Micron's the leader in DRAM memory chips. We've covered this one in the past, and this you need to look at this one with fresh eyes again. And a lot of you are probably in the stock, and so I want to kind of walk you through why I think this stock is poised to break out and could really be one of the leaders, I think, in the space price-wise and stock-wise over the next couple of months. And so that's a good segue into the chart. I don't need a huge introduction here, but if you look at this chart, and if you've been in the stock, you know Micron's been underperforming. It's just been one of those stocks where you almost can't really justify it in your mind, like why this stock has continued to go down, right? I mean, it had... I'll walk you through just kind of what happened in the chart here. So this is when all tech stocks started selling off, but most of them started to rally from here, and a lot of them broke out to new highs, just in June, July, August timeframe. And you can see Micron just continued to go down, right? It used to be in a nice strong uptrend. It broke that uptrend and continued going lower. You can see the 50-day traded below the 200-day. Kind of back in August, September timeframe, which not a good sign, right? That just shows that the downtrend, would likely continue. And that was really because right around here is when that piece was put out that talked about the coming winter with Micron in their DRAM chips. And so it's more of a commodity product. It's pricing fluctuates quite a bit. It doesn't have as strong of pricing power as some of the other chip manufacturers. And so it goes through these, economic cycles where, prices go down for their chips. And so earnings, also cycle. What we've seen though, is that obviously the stock kind of factored that into the price. But what we're seeing now is that end demand, right? If you think about the end products this goes into, PCs, mobile, data centers, things like that, the end demand has not come down and the pricing has not come down. And if we're really being honest, I mean, if you think about for the next few years, especially as we work through the supply, chain issues, I don't see demand for those products coming down anytime soon. On top of that, there's new computing technologies that are going to need memory, right? Memory makes computing faster and faster with everything. And so if you think about 5G, AI, right, you need these type of chips. So now, I mean, you really got to think, are we going to cycle as hard as this company has cycled in the past? And I think now analysts are starting to come out and say, we don't see that downturn coming anytime soon. And so last week we started getting some upgrades, some price target hikes, things like that. And so, this stock bottomed out kind of mid-October, and it was kind of in that 66 range. And you can see it's had a nice, run up from there. And it kind of broke this downtrend, right? So, we were kind of like lower highs, bottomed out, broke above this kind of level here, just recently. And then you can see this huge surge that it had on Friday, right? So the stock was up quite a bit on Friday, and it got an upgrade from an analyst. I think it raised its price target to like 120 or something like that. And so if you think about where this stock should be based on maybe pushing out this cycle a few years, if we even get it as hard as it has in the past, this stock, you can justify this stock going much, much higher from here. And so what I loved about the move on Friday was it broke above this level here, kind of that $82 level, which is when that last report came out about the coming winter. So now we're above that level, and that's a very, very strong signal that I think this stock could certainly be moving much, much higher, and even probably come up and test and break out from this all-time high here. And so let's walk through some of the valuation, because I mean, I don't think we need much of multiple expansion here at all. It's trading at a very attractive valuation for us to get up into that $100 range, right? And it shouldn't take much. And by the way, Micron has underperformed the entire semiconductor market, as you can imagine. I mean, you see this chart, and you think about Nvidia and AMD and all of these, semiconductor companies have been so strong this year. Nvidia is up 150%, AMD is up 70 some percent. Micron's only up 10%. So there's a lot of catch up here that I think could be going on throughout the end of the year and even into next year. So let's talk about just real fast. Again, so here's that move on Friday. We were up almost 8%, so we're at $83 a share. If you're looking at cash secured puts, this is the zone we're going to be looking at, but I would actually look even higher than that because of this move that we've seen and how strong it is and breaking out. A lot of times I'll go above the strike zone and write a tighter strike price to generate more income. But we'll talk about that later because this is actually one that I think you purchase. You're probably already long it, but I would actually add at this level, even though we're up from the lows of mid 60s, and now we're up into the low 80s. I think now's the time you even add to it as on the way up because I think this thing is going to pop here soon. So you can see safety and value. Those are the two. That's a great combination. If we can find a high safety and a high value, I mean that's definitely a combination that you want to see with the stock, right? And so we already talked about the chart, but let's look at the valuation because this is where you can justify a much higher price from here. And we'll talk about the sales here as well in kind of the projections. But look, this is trading at roughly 7.5 times. So it's 2023 earnings, right? And so their fiscal year is August, right? So the coming up year here is August of 2022. They're projecting about $9 of sales there, or of earnings. And so we're looking at this forward number always looks at the next year out. So the next fiscal year would be their fiscal 2023, and they're actually projecting almost $11, so $10.91. So let's just get this in here so we can see. So 2023, they're actually looking at over $10 of earnings, almost $11, right? So they're projecting still that this earnings momentum is going to continue into 2023, which is August of 2023. So we're looking pretty far out, and then they don't expect earnings to kind of flatten out until 2024. And that's really what they're expecting now, just kind of a flattening out of earnings, not necessarily a big decline like we saw here between 2018 and 2020. And so if that's the case, I mean, you can make a case for this stock to be extremely, extremely undervalued at this point, right? Because you think about what their average multiple, PE multiple, has been about 15 to 16 times. We're trading at 7.5 times forward right now. So this is a situation where just a little bit of margin or multiple expansion up into not even to their average, but just a little bit higher than here, you can justify a much higher price. And so even if we kind of peak at, so this was, like I said, this was about $11, $10.91, and then I think this is coming in about 10.5, right? So they're kind of projecting it to come down a little bit in 2024, but kind of flatten out in that 10 range. If we flatten out in that 10 range, you can justify a price based on even a flattening out trough kind of range of earnings. So if we can hang our hat on $10 of earnings, and then we can put, I mean, look, even a 10 times multiple gets you to $100. So this is probably the low end of where I think the stock's going to go, $100, and that would break us out above that 95 or 96 level that it was at. And I think if it breaks through and makes new highs, I mean, this thing could go another 10, 20% above that level, right? So if we put a conservative range, so this is $10 of earnings times, say, a 12 multiple, right? The math here is extremely easy. We're up at that 120 level, right? So there's easy justification for this stock to be between $100 and $120 very, very easily. And that still would put the multiple below historical averages. I mean, if you really want to make a bull case here and you can bank on that $10 of earnings, I mean, you could make a bull case that this just goes up to the average PE multiple of 15. I mean, you're looking at a $150 stock, right? Which is almost double from the current levels. So I think on the low end, you can justify, $100 to $120 stock price. And on the high end, a real bull case, you could probably get up into the 150 range. And you can see what has happened with some of these catch-up stocks. So, look at the chart of Qualcomm recently. Qualcomm was in the 120, 130 range, and then all of a sudden it just shot through the roof and went up to like 180, and that was over a course of like a month. I think the same thing could happen here with Micron. And again, this is not crazy multiple expansion like we've seen. Nvidia is trading at 75 times, earnings, which is crazy, but it's just one of those stocks that, I think it's well loved and can do no wrong, which justifies clearly a higher multiple because people are willing to pay for that. This is not that kind of crazy multiple expansion. This is literally just getting you up to an average, PE multiple, and this upside here is huge. So anyway, I don't want to beat a dead horse on that, but this is definitely a stock that if you own it, stay long. I would actually add some more at this level. If you're a little worried about just short-term fluctuations, it's a great thing. Just as part of your position as a whole here, to write some puts at lower prices, right? And it doesn't have to be your entire position in puts, because I think you want to be long this thing, right? But just to supplement it, and typically what I would do is say, you want to be down in this strike zone range of 70 to 75, but I think that's actually probably too low for a stock that is breaking out here. So this is a little bit different strategy than maximizing your margin of safety that we typically do. When you got a stock like this that's breaking out that you think could continue to move higher, I would actually go even upward towards this $80 one. So if it drops a little bit, you can buy more at $80 or even the 77.5. But look, you get really, really nice premiums, right? So you're utilizing the fact that this thing's breaking out, and as long as that breakout does not fail, this thing probably is not going to touch 80 again, right? It's just going to continue to move higher. So what you're doing is you're locking in this really nice premium over, this is 28 days, right? So you're getting 2.5% return over 28 days, and you're giving yourself a little bit of margin of safety to buy more shares at $80. So it's just, it's a way to use cash secured puts, just to supplement maybe your long position. So it allows you to stay long, allows you to buy a little bit on the dip if you want to. That's a much higher delta than what you would normally do. But again, it's a little bit different strategy to think about as you write puts. Quite frankly, on the call side, I would probably stay away from writing covered calls right now, just because I think I saw what happened with Qualcomm, and I think the same thing could potentially happen with Micron here. And so you don't want to limit yourself. I mean, even if you go up to this 100, you're only getting about 0.5%. You're getting 50 cents for writing that covered call. So what I would do, I would keep this covered call strategy, in your pocket, but I would wait. If this stock shoots up, towards $100, between now and the end of the year, I think then maybe you start thinking about writing covered calls at a higher price there, right? Maybe up in that 120, 130 range of where we think the stock could go. Because I think that's the time to write covered calls, not necessarily right now. So I would keep the strategy in your pocket, but it's not worth the 50 cents you can get for giving up this upside on a stock that's truly breaking out, right? So be cautious of writing covered calls on stocks that are breaking out, because again, these things can really, really move and really fly. And I think Micron has a lot of room to catch up here. So that's our trade. Again, stay long Micron. I would add at this level. I would feel comfortable adding more shares, even at in the low 80s here. And then if you really want, to protect yourself a little bit, you could get a little more aggressive on these cash secured puts if you wanted to, somewhere in that 77.5 or 80 range. But that's our trade. So stay long Micron. Take care.